Welcome and greetings. Margaret, I'm so happy to see that you're the first one that came up. Hello, everybody. Thank you for being here today. We are broadcasting live from Florida, somewhere in Canada, and Brooklyn. So thank you all for being here today. If someone wouldn't mind just saying hello back in the chat box and make sure we're getting out there. Zoom is pretty bulletproof and works well. Hello, thank you, Robbie. So a couple Zoom housekeeping. You're all accustomed to this, but we are encouraging and welcome any questions in the chat box in the Q&A. Please feel free to ask them as we go along. And we're going to get to as many as we can. So just for the record, this is being recorded. We can't see or hear you, but we will be seeing your chat and your Q&A, and so that will be on the recording as well. More importantly, is if for whatever reason you have to bail early or want to share it with somebody that would benefit from learning about what we're going to learn about today, from Richard and Robert, feel free to share it once it is in a couple of days on the Family Office Insights YouTube channel. So welcome and thank you all for spending your time with us today. We certainly appreciate it. You've been amazing Family Office Insights members, and I'm grateful for your participation here. I'm going to hand it off to Richard and have him introduce himself and his colleagues, and then we'll go formally into the presentation. And again, feel free to ask any questions as we go along there. I'm most welcome. Thank you, Richard. Take it away.
Great. Thank you very much, Arthur. Thank you for setting this up. Hello, everyone. My name is Richard Johnson. I'm the founder and CEO of Texture Capital. Looking forward to telling you everything about what we're up to today. I'm joined by my colleague, Robert Young, as well, who will be helping me out with some parts of this presentation. So let me introduce you to Texture Capital. We are a FINRA member and SEC registered broker-dealer, helping institutions more efficiently and directly participate in private markets by providing them tools for tokenization, issuance and secondary trading and secondary market liquidity. We leverage digital securities to provide increased liquidity, transparency, and efficiency, which in turn greatly improves capital formation for issuers and investment opportunities to institutions. So this is the team. As I said, my name is Richard Johnson. Robert is on the call with me as well here. And our third co-founder is not on this call, John Halloran. The three of us all used to work together in a previous life at a company called LiquidNet. And we've been joined by some other fantastic members of the team, Lara Schlachter, investment banker and securities lawyer, Ilan Lessig, our CCO, and Justin Slaughter, a former CFTC chief policy advisor. We're really excited about what we're doing. I thought I might give you a bit of history of how we got here. As I mentioned, John, Robert, and myself all have a extensive background in securities markets. Specifically, we're in electronic trading, starting over 20 years ago when there wasn't a lot of electronic trading going on. And then in around 2015, I met these guys at LiquidNet, having been acquired having my previous startup was acquired by LiquidNet. And then after that, I went over to SocGen and ran electronic trading in the Americas for them. So after SocGen, I was kind of looking for something more interesting, something different to do. I think we'd had a great run in the electronic trading space, and it had gone from nothing to really dominating everything. And I stumbled upon Bitcoin at the time and blockchain technology, and I really thought there was something special there, and decided to pivot and focus on that for the next coming years. Specifically, so I spent some time consulting with some startups in the space, one of whom you have heard of called ItBit, and then I went to another company called Greenwich Associates, where I spent 4 years as a market structure analyst covering equity market structure, FinTech, blockchain, and crypto for them. And it was at Greenwich where I had the light bulb moment. It was 2018. The last crypto boom was kind of ending, and the ICOs were definitely blowing up at the time. Jay Clayton, the SEC chairman, came out and said every ICO is a security. These platforms need to be regulated under the Exchange Act or under the Securities Act. And to me, that was really a call to arms. I very much agreed with him. I felt that a lot of these, what was ICOs back then, were complete scams, and that there needed to be a way for companies to leverage this technology in a fully compliant way to raise capital on the blockchain, and also to create a secondary market for trading of these tokens. So that's what I set out to do. Roped in Robert and John early 2019. We spent quite a bit of time, figuring out the business plan. We did know, however, that we wanted to be a broker dealer, and that was important. And that was a high regulatory burden for us, for everyone. We spent about 4 months putting our paperwork together, submitted it to FINRA in July of 2019. And then in September, just 9 weeks ago, we did finally get our approval from both the SEC and FINRA to launch. And so it was a long process. Whenever you say you're trying to use this modern technology, they get quite skittish, but we've overcome that hurdle, and we're really excited to move into launch mode and to tell you all about what we're up to. So I mentioned blockchain, I mentioned digital securities. Specifically, what we can do is we are regulated to operate a broker dealer that helps issuers raise capital in private markets using Reg D securities as digital securities offerings. So we only do private placements. We can do tokenization. We have our own technology for that on the Ethereum blockchain, but we are agnostic to different blockchains and different token standards. What I mean by tokenization is the act of taking an existing security that was issued last year, 2 years ago, 3 years ago, whatever it is, and tokenizing it. So this, which I'll talk about a bit later, we see as a key part of our strategy. And the secondary market is another very important part of our strategy. As I mentioned, we all come from trading backgrounds, and in my mind, the best use case for this technology is in the transfer of value, is in trading. So we're very happy to, so we applied for the ATS license as well straight away. We knew that was going to be important for us. And we have that, and we're looking forward to building up that market. By the way, I just want to say, if you guys have any questions in the middle, don't hold back, throw them over. Happy to answer them as we go. Often you get better contacts that way. So a little to talk about kind of our commitment, why we're doing this. Well, our mission is to improve the structure of private markets through modern technology, delivering increased efficiency, participation, and capital allocation. I'm a bit of a market structure nerd, having spent so much time in electronic trading and as an analyst in the space. And I really think there's tremendous opportunities here to improve the structure of private markets. But looking out beyond that, we have a much bolder vision. I think there's much more that we can do with this technology, and we're really just getting started. So if you guys have heard of DeFi, it's a bit of a wild west now, but there's some crazy innovation going on and some very exciting innovation going on in that space. So we see, once we've conquered private markets, there's a long-term vision where I think we can do a lot more with this technology and really change the way markets work and improve capital allocation throughout the economy. So some of the challenges we're seeking to address really cuts three ways: liquidity, transparency, and access. There is no liquidity in secondary markets, very little liquidity compared to the size of them. I've seen some research, conducted some research showing that 64% of institutional investors stay out of private markets because of the lack of liquidity. You need to have 5-year, 10-year capital or whatever it is. Similarly, transparency, there's not a lot of transparency. I think it's why we have events like this. I'm not trying to put Arthur out of a job at all, but there definitely needs to be more transparency in the space, I think, here. And access as well. I don't need to tell you guys this, coming from the family office space, you are increasingly allocating to private markets. BlackRock, for example, is recommending to everyone that they should have a 10% to 40% exposure to private markets.
Now, if you look at issuers, this is Robert speaking now, if you look at issuers, they kind of line up the same three bullets. When it comes to liquidity, issuers typically find themselves subject to a liquidity discount, which is applied to recognize the difficulty in transferring shares. And that discount on their share price can range anywhere from 15 to 25% and up. And I'm sure you're familiar with that. Certainly, I ran a large private company, and our valuation committee always was staring at that unlocked value, and collectively that can be a very big issue for for issuers. In terms of transparency, there's really a real struggle. Again, having been secretary of a large private company, a lot of lack of clarity on who owns the shares, where they were acquired, what restrictions might apply on transfer when, Joe from accounting comes in and says, can I do something here? That is really a problematic. And finally, on access, it's the flip side of the coin that Richard mentioned. As a recent Silicon Valley Bank study showed that the biggest barrier cited for family offices was access to deals. And yet, the average family office only sees, according to that study, 72 pitches a year. There are 20,000 Reg D offerings a year in the market. So there's a big gap because it's so difficult to get out there and find these things. And again, we're telling you what the problems that I'm sure you know every day.
So we're building a solution to solve for this. The institutional marketplace for private capital, leveraging our abilities around tokenization, secondary trading, digital securities offerings, and so forth. For investors, there's many benefits in terms of better access to private market opportunities, potential liquidity via secondary markets, improved capital allocation and risk management. And also we're trying to create an ecosystem here as well, where it's not just about the deals, it's about getting the information as well. So a secure way for sharing of information between companies and private investors.
And so again, speaking to the issuer side, the top of the slide there, so, and Richard said, we're building a marketplace, one-stop access to scores and ultimately hundreds of investors as we build mass. So investors are able to, they're pre-qualified by characteristics, able to see select investment information, which speeds capital raising for issuers. Texture is licensed to provide advisory services to issuers who are, as you may know, are not generally well-versed in capital markets, which is our expertise. So we can really help them make this more quickly, make things happen more quickly and more compliantly, if you will. The increase in liquidity that comes out of this sort of marketplace liquidity serves to offset the liquidity discount that I mentioned, which applies to valuations, makes this attractive valuation for issuers wanting to achieve a higher valuation, wanting to unlock that piece I mentioned about the last slide. And for employees, this can level, when thought of in terms of the context of employees, this can level the executive hiring playing field when you're hiring versus a public company who's giving away publicly traded stock. The concept that you could actually maybe trade some of this stock or stock options it also can address any unforeseen liquidity needs that employees or early investors may have, which makes the company more attractive and a more attractive investment regardless of the entry point of the investor. And finally, just on the right-hand side, as Richard and I and our co-founder John have done this a few times before, all of these things happen in an ecosystem. So we spent a tremendous amount of time working with transfer agents, working with other trading firms who are free to interconnect to us, working with the technology firms and all sorts of custodians that are all necessary to make this all work in the larger scheme of things.
Thank you.
So speaking, I know you guys are going to get to it, but allow me, or you can pass. And speaking of getting rid of a job, and thank God I don't need one. At some point, could you talk about somebody, a competitor or somebody who's doing this, if there is any, and sort of compare and contrast that sort of thing? Because I know who's on the call, and a lot of these people are well versed in this area and are anxious to have access to something that actually works like this. And I don't mean to be a smart ass, but it would be helpful to at some point talk about who's doing this, if anybody, and if you don't mind, and at some point if you think it makes sense.
Yeah, I do have a slide on that later on, but let me just touch on it now. I think a key differentiator for us is that we're focusing on institutional client, on the institutional space. That's why we're saying on this slide here, look, the institutional marketplace with private capital. That's where I've spent my career. It's where Robert's been his entire career, and that's what we feel is going to be necessary for the space to take off. In particular, I think we've analyzed, and the reason I wanted to kind of come and speak to you all about it is because I see I'm seeing family offices such as yourself increasingly getting into the space. Some recent statistics on that is 76% of family office investors are currently making direct investments in private companies. That was about 50% 2 years ago. So that's a big change and a big increase. So I think that's kind of the area we want to start off at, but there's also kind of at the other end of the market, you are getting like the T Rows and the Wellingtons getting involved in more late stage companies. I think that's going to be an area we'll be focusing on as we grow. Couple of other differentiators. We're a broker dealer, so we have a broker dealer model, and we are technology agnostic as well.
No, I could just add to that. So in addition to the first point about us coming at this from an institutional, our legacy, institutional point of view, an institutional mindset, and so on, there are a number of firms kind of coming from like the Reg CF, the crowdfunding space, or sort of retail oriented. How do I get some liquidity? We're coming at it as an institution, and I will also add that we're building this as a marketplace, which may just sound, it may be more geek stuff like Richard mentioned about us being market structure geeks, but as a marketplace, it's one place you go for everything. Whereas most of the folks that have been in this business for a long time, and I'll tell you why in a minute, but did it as a sort of broker. So I get on the phone, I try and find somebody the other side of this. The reason that this can happen now is that the technology is available. Everybody's gone electronic. We're doing this electronically. So building a marketplace couldn't be done a few years back. I just like to add those a couple of things to the answer to that question. Richard.
Thanks, Robert. So let's talk about the opportunity. There's a huge opportunity here. So we make money from two sides of the market, essentially the primary side and from the secondary trading. Private companies are a massive part of the economy. They are, I think, 99.7% of all companies in the US. They represent 2/3 of net jobs, and they're increasingly turning to private markets. There are 20,000 companies raise capital per year, raise about $200 billion per year, and yet there's hardly any technology underpinning all of that capital formation. We went into the SEC's Edgar database and pulled down all the Form D filings to try and get an estimate of what the size of this market is. There is no, there's no real Bloomberg for this type of information, so we had to go get it ourselves. We conservatively estimate that $1.5 billion per year is paid out to by issuers to broker dealers in this space. I say conservatively because the Reg D database is not super robust the way that works. And also of note here is that issuers engage brokers in only about 12% of private deals. Most of the rest of it happens without a broker. I have some ideas around that because we just did a survey quite recently of issuers in private markets. We're going to be releasing the results this week. And most of them had very, very low marks for the brokers in their space. So we think there's a lot of room for improvement with our model, and to the extent that we can increase that 12% participation rate, then that pie will grow as well. On the secondary side, it is very small when you look at it compared to the size of the primary markets. And if you look at the secondary market in public equities versus the primary market, it's a complete mismatch. The reason for that is some of the things we spoke about, lack of access and lack of transparency. And also the complex regulations around secondary trading. So what our technology does, it enables to, through smart contracts, we're able to kind of program in a lot of the rules, such as 144 or 144A and so forth. Any issuer preferences, issuer controls, we can program that in and streamline the secondary market, ideally. So the current stats we have on that, it's a 0.6 billion. This is based on some research by Stanford University, and NASDAQ Private Market puts out some research as well. We think there's a significant opportunity for this to grow from here. Other data points in the addressable market, I think there's not quite the segment we're targeting, but shows the demand for secondary transactions in private companies, $40 billion per year in GP-led secondaries. Blackstone is setting up a big fund for secondary transactions as well. So we see this as a fantastic opportunity and one that can grow over time. 1 second. I spoke a bit about this just now. So sources of revenue on the issuance, we'll be charging 5% fees paid by the issuer. We believe issuers are going to come to us because of the technology we have, because we have a differentiated offering. and we're building a marketplace that will allow them to connect with more investors. And also we feel we can help them reduce that illiquidity discounts and to offer liquidity to employees and earlier investors. We're attracting investors on the trading side to come to our market as well, to interact with these opportunities in both the primary and secondary market. But on the secondary side, we're charging fees of 2.5%. Our analysis shows that this is about half the rate that some of the other firms charge. Some firms like SharesPost, for example, is charging 5%. We're starting from 2.5%. We have a technology-based solution. It's very scalable. I'm happy for us to be a lower cost provider in this space in the trading side as we move forward. And in general, we see the way we're structuring this marketplace, we want to get the flywheel effect where as we bring on new issuers, we'll attract new investors, and new investors will attract new issuers, and really get the flywheel going there and grow a market in that way. I've got some numbers here. I won't go into too much detail on this. Certainly can schedule another call with you folks, but we think we have and go into the spreadsheet in more detail, but we think we have a very compelling business case here, very reasonable assumptions. For example, in year one, we think we can bring on 6 primary deals. We're going to be working with partners to help distribute it. We realize that we're a brand new firm and we've got to build up our distribution. So we already have a number of different partnerships in place, including broker dealers and so forth. But as you see, over time, we're going to be relying less on our distribution network and more on our internal network for placing these types of deals. Tokenization is a key part of our strategy, not because we make any money. We're offering this as low or no revenue, but once we can do this very cheaply because we have our own technology. That enables us to onboard securities and gain critical mass, and we will make money on the trading side when they trade in our ATM. Talking about trading, did some analysis here. The average annual turnover of a public company is about 150%. That's actually kind of an interesting constant, whether you're Google or a Russell small cap stock, it tends to be about 150%. We're assuming 10%, so very conservative. We're not going to get anything like the turnover in public markets, but we'll get some. And even with those numbers, it's a compelling story here. And then the last point, if you look at that into detail, we see our margins are increasing over time as we leverage the network effect in our model. We think these are conservative estimates, and we think it's going to be a great business.
Richard,
yep.
One of the challenges with the market as it is one that you're trying to solve, which is liquidity, a market for liquidity, and the delta between what someone's willing to pay and what they're willing to sell for and what the marketplace will buy. Is it a prerequisite to cause the security to be one that's digital? And by definition, does that increase the liquidity?
Yes. So in our model, I think from FINRA's point of view, we can do non-digital trade and issue these types of securities, but we're focused on the digitization process. It doesn't make liquidity appear out of thin air, but having a streamlined the idea of what we can bring now with the technology is take out all the frictions in the secondary market, which are really depressing. We feel really depressing the secondary trading. A lot other solutions out there or trades out there are really done in a very old-fashioned way of putting two phones together, trying to match a deal, and trying to find the trade. We have an ATS. It's an electronic order book. It's a dark order book. Investors can put in buy orders or sell orders, and you can have a good to cancel orders as well. So you always kind of have your order expressed out in the market, available to get liquidity when it comes in. But there's other, it's not just the technology here. It's not just the blockchain that's going to solve this. We've got to put other parts of the market piece together. And I've spoken about some of them, building up a network of distribution partners, our own network, and some of our marketing efforts. In fact, let me get onto that perhaps here on this go-to-market slide. I spoke a bit about tokenization. We think this is going to be a really key strategy for us. The way the market works right now, or the way it is right now in the market, you got some of the early entrants came in as a technology providers. They're charging $50,000 or $100,000 to tokenize a company's securities. Now, for a private company, that's a pretty high burden. As a CEO of a private company, I know that, and I'm sure a lot of you guys do. What we can do, we have our technology. We can offer tokenization as for free, basically, and or very low cost to cover our our due diligence and whatever costs. So the process of tokenization, what we do is we look at the security as it was issued. Is it a corporation? Is it a fund? If it's a fund, if it's a 40 Act exemption, maybe you have a maximum of 99 shareholders. We code all this into the smart contract, and then we're able to deploy the smart contract onto our platform, and it becomes eligible for trading in the ATS. We've seen that the average private investment has about 20 investors, 25 investors. So the process of onboarding an issue, or at the same time, we're also onboarding the investors. So if we have 25 investors in an issue, we onboard 20 firms, that's 500 investors that we've onboarded at the end of this. So in this way, we're able to kind of build both sides of the market at the same time and get around our chicken and the egg problem.
Robert, do you see the chat box there?
Yeah, there's a related question there, Richard. So I'll take the last one first. So just about the market structure, and we're market structure geeks, but there's a question there about market makers, liquidity as well. So there will be no market makers. This is what we call geek speak, all natural buyers and sellers. There's no market makers, and so there's just no. We avoid any difficulties that come up. Having run a number of markets, trust me, there's always difficulties because they get preference. So there's no market makers in there. And in fact, this is a call auction. So call auctions would have historically been used in illiquid markets and are still used to open and close NYSE and NASDAQ, because at that moment that it opens, it's uncertain what the price should be. So this texture will run 2 markets, 2 calls a day. And so that's the model, which is a little different. Call means at a point in time, all the buyers and sellers are in there, and we run an algorithm that figures out, how to allocate the shares. The other thing I'd like to say about that is, as Richard pointed out, we worked together previously at a very large institutional brokerage and alternative trading system, a global company that struggled or conquered, frankly, the problems of providing liquidity in very large block share trades. For some tricks, and I'm happy to take it offline, but there's a number of tricks about how to do that. We're going to borrow from our having done this for a community of about 1,000 institutions in public equities, of how to make a market that's highly problematic from a liquidity point of view, how to actually make it work. Richard, there's also some questions, and I hope that the questioner, I hope that answers the questions about market makers and so on. Richard, there's a question in there about how settlement works and how custody works. They're bound up in regulation. I'd love to talk about it, but I'm going to give Richard a chance.
I just pulled it up here from Piyush. Great question. I don't know if you noticed, but last night a letter came out from 9 congresspeople to the SEC, telling them they need to provide guidance to broker-dealers on how they can provide custody for digital securities. So definitely you've done your homework, and it is an issue in the space. We have a model that's been approved. It very much follows some guidance that was introduced in July of last year, July of 2019 by what's called the joint statement by the SEC and FINRA. We're following that very closely, and we are relying on a transfer agent to be the control location for the securities. Like I said, this is a version 1 model. It's approved. We can go live with that. We don't love it. We've got lots of ideas about how to improve it, but we're somewhat constrained by the regulatory position, as evidenced by 9 Congress people needing to get involved. After 3 or 4 years of this. One of the beauties, the great things about our position now is that we are a FINRA member. We're an SEC registered broker-dealer. We're in the country club. So, when they want to talk about how to change the rules, they're going to ask the members first. And we're very happy to have that dialogue as we've been having for the last 2 years with them, pretty much going through this process. Question about settlement, that does get very detailed. I'd be happy to schedule a demo with you. Essentially, we're a non-custodial broker-dealer, so we can't be too involved in the settlement. However, we help, we provide instructions. After trade it happens, we send the buyer and seller the instructions they need to make. So the buyer needs to send cash to cover the purchase, and the seller needs to instruct the transfer agent separately. We have plans to obviously improve that going forward. There was something a couple months ago, a no action letter from the SEC saying that broker dealers could move to a 3-step process. So with the funds we're raising in this round, that may be something we dedicate these resources to. I've got this chat.
And the question.
I'm going to go through it. Yeah. Are you?
The question from Paul. I'll take.
Okay. Go ahead, Robert.
Yeah, go ahead. You broke
Yeah,
up.
I say so.
Go ahead.
Can you hear me okay?
Yep, go ahead.
Okay, great. So Paul's asking the question, how do you convert from tokens back to cash after you sell securities? So for clarity, the tokens are used, we use tokens internally. You think of it being used internally. All trades are equity for cash. So at the end of the trade, you'll be, if you're a seller, you'll be said here, you'll be told, hey, you've just sold 500 shares or 500,000 shares. And the buyer would say, you've just bought 500,000 shares, send the cash, here's where to send the cash, here's how to instruct your shares, as Richard was saying on the settlement process. You're not getting tokens, there's not a token sort of aspect that falls into the hands or the workflow of an investor or issuer really here. We're using tokens, we're using this digital framework because it allows us, Richard touched on earlier, it allows us to do a really superior job to what it's historically been able to do to remove the frictions that arise out of the restrictions on transfer of unregistered equity in the US. So we use tokens and smart contracts to sort all that stuff out under the covers. Hope we answered the question, Paul.
There's a question here about, are you partnering with companies that tokenize real estate? Yes, great question. That's probably half our pipeline is real estate entities. We also understand that it's a big sector of interest to family offices. But the thing with real estate is it's a massive asset class, but it's very hard, but it's very illiquid, which is why so many deals are done in private. You get 40 Act exempt funds, they're either 5-year or 7-year deals. And there's no liquidity. So there's a lot of interest from real estate issuers or entities who want to leverage tokenization and our secondary market. They really feel it would help them attract more investors and really differentiate their product from the rest there. In fact, I had one real estate developer I spoke to describe that he goes, oh my God, that sounds like Nirvana. It's like some of the best customer feedback you could get when I was telling him about our model. So yes, about half our pipeline is. I'd love to be able to tell you about some of the deals on there. One very large fund and a couple of smaller deals. We hope to have some of those live, in Q1.
And the question, are we up and running yet? It's a wonderful thing about being a regulated marketplace. So we determined from the beginning that was the right way to go. As Richard mentioned, it took us years to get there. There are very few people that have the same sort of licenses as we have. That years ended about 8 weeks ago. So we are ready to go. And the other thing about being a regulated marketplace, you're not allowed to solicit business until you're up and until you're approved. So you spend, in our case, a couple of years getting approval, and then they can say, okay, now you can start talking to customers. So as Richard said, we've talked to, we've got scores of issuers, a good dozen of them or so that are quite keen. We've got a broad background in the institutional side, but we're not running. That said, we've built our system. We took all the downtime while we're waiting for the regulators to come back and quibble about this or that, and built a system. So we're happy to demo it to anybody who wants to see it. It's fully production. It onboards institutional or individual customers. Allows for issuance of shares in a new market, in a new share context, and the trading of shares in a secondary context.
I may have missed this, so I apologize, but did we address what it costs for a family office to get access?
Well, there's no cost really. The cost, we want to make revenue from family offices when they invest in the companies, in which case, if it's in a primary offering, the issuers will pay us. If it's a secondary offering, we will charge family office investors commission on those trades.
So pretty standard, straightforward. There's no requisite annual membership fee or anything like that.
No, we do want to, at some point in our longer term roadmap, we're thinking about, well, what kind of research can we provide? What kind of data can we provide around these types of companies? So maybe down the road, if we come up with a great product, that will be an add-on. But for now, no, nothing.
Yeah, fair enough.
Yeah.
Robert, you see that last question there?
Yeah, the one from Andrew.
Actually,
the glasses are good.
It's a woman, actually, Andrea, but.
Oh, sorry, Andrea. See, apparently I don't see the question. I had to get the glasses out.
I happen to know her, so it's fine.
Now she's laughing at us. Good for you. So the point of tokenization, is it about just raising capital? If you're only tokenizing once, they've raised capital. No, actually, the point of tokenization is to get the cap table, where's all of the provenance of the shares, all the things that you need to know to facilitate the transfer of securities under the 33 Act or under the restrictions that issuers sometimes place as well, to get that all into a digital framework. And so it's really important that we have that on an ongoing basis, because after the raise you have that secondary component, the post issuance trading, if you will. And that's when we really want to know, is this allowed to be transferred to a resident of Idaho, or was this going to put them over the maximum number of owners they want to have on the cap table? Maybe they've wanted to be restrictive in the number of owners they have in the cap table. There's a question about real estate funds. Some of them have a 99 holder restriction, for instance. So all of that is why we're the point of tokenization. So I think, Andrea, you had a couple other questions in there. We talked about any traction on the current marketplace. We talked a little bit about that all the way. I think we already covered that. So I think that's Andrew's questions. Let us know if we missed some of it.
Okay.
I think we're good, but Andrea, if there's more.
And coming up to Richard's going to talk about the competitive landscape, Andrea, in a minute. Thanks.
Partnerships are a big part of our strategy. Transfer agents are key. I spoke a little bit about that. They help the issuers, or the issuer may be their own transfer agent, but they help the issuers manage their cap table and obviously approve transfers and distributions. And in our model are the control location for the securities. Broker dealer is very important. Every conversation we have with these folks is, but the advantage we have here, we're one of 5 or 6 companies out there that are licensed to do this, and licensed to play a primary role. So if they have a customer come to them who wants to do a token offering or in some way use blockchain technology, they can't do it. So we want to work with these guys, help them come up with a very reasonable commercial arrangement around that. Other types of distribution partners such as technology providers, and then market infrastructure. I'm talking here about custodians and the like those types of entities. A few of the companies on the bottom we're partnering with. I'll highlight Solid Block. We're working with them on something, and they're one of the kind of real estate issuers in the space that we're working with. So where are we in terms of traction? We've been doing quite a bit of marketing. We have kind of a digital marketing engine that we feed. Some of you might even have got my emails at some point, but we send out a lot of emails. We do a lot of targeted messaging and marketing, and it's a very, very low percentage hit rate, but we're getting quite a few leads coming through the pipeline that way. We're talking to about 10 different issuers to come on the platform now. We've had to say no to a few just based on the due diligence we've done with them, but combining this strategy with our tokenization, our low-cost tokenization, we're hoping to get 20 clients by mid next year. This is the competitors in the space. If you look at the kind of the top left quadrant, that's where I think a lot of the activity is. When people think of digital securities, they'll think of maybe T0 or Open Finance, some of the other players in the space. T0, you may have heard of them. They've you raised a lot of money for their token, $100 million or something like that, or it's worth 100 million now. Box is the Boston's options exchange. They have the Boston Security Token Exchange is they're trying to get public. They're trying to get it public as to trade public equities, which I think is very difficult because there's already so much infrastructure around public equities. And that's why I love private markets so much, because there is no infrastructure. We can it's a green field. We can start from scratch. Then if you kind of look down on let's go clockwise here. Crypto companies. I put this on here. Sometimes people say to us, "Oh, are you guys like Coinbase or blah, blah, blah?" We're not really. They do have a broker dealer, but and they're not. We wouldn't really consider them our competitors. Bottom right, we would. And I think I think a lot of people in the space don't realize that that's where the market is. A lot of market is right now on the secondary side, but that's where the 0.6 billion is going right now to folks like NASDAQ. Forge and SharesPost just merged. Carter just got into the space. So there's definitely interest in the space, and we're part of that. We're the only one out of those companies who use the blockchain, so we see that as a key advantage there. And then bottom left, other broker dealers. That's who's taking the 1.5 billion on the previous slide from the primary offerings. Again, we want to partner with them. If they we can help them do deals, do the token aspect, and be very fair on the economic split on that. And also, as a lot of these folks, the brokers don't work in the secondary market so much. We can come, we kind of have that. If we can tokenize one of their previously issued securities, then we can get all the kind of secondary trading revenue from that as well. There's, it's very dynamic. Coming back to the top left segment here, Open Finance did just get acquired. They brought another digital securities broker dealer, Securitize. Acquired a broker dealer as well. So they were a technology provider and they bought a broker dealer and an ATS. So they're kind of a competitor, but at the same time, we're kind of working with them on a few deals where they're doing the token issuance part and we want to trade on our ATS.
There's a question in the chat there, Richard. A question in the chat about Templum, which isn't on here. So I'll just answer. So Templum is another firm out there that has a marketplace for secondary trading of securities. They did an issuance. We know that they one of the differentiators we talked about earlier is Templum has a very aggressively retail focus as opposed to family offices and other institutions like ours. So I think that's a differentiator there. They've also did one deal and they've kind of gone quiet in the last little while. We're not really sure why, but we do know they're very retail focused.
Yeah, this isn't an exhaustive list. There's a couple of others out there. I should update it. INX is another one. They're trying to raise $100 million. Arguably, and Prometheum also trying to raise at a very high valuation. I'd say arguably we've got more technology and we're further along than they are, but I'll let you guys decide that. Okay, quick bit of a roadmap. We actually started before Q2 2020, but we were building out our product the whole time we were in FINRA. The first MVP was ready then. We've evolved it a bit since then. If you've worked in technology, the product's never finished and there's always work to do, but we'd be happy to give a demo to anyone after this. We got our FINRA membership and approval end of Q3. And now we're kind of beginning the launch. Kind of going back to the question, are we up and running? Well, we've got a pipeline. There's a lot of deals in the pipeline, but there's one for sure I can tell you is going to go through our platform very soon, and that's our own offering. Texture Capital Holdings, the holding company, the broker dealer, will be doing a seed round via digital securities offering, and I've got some details about that coming up. We're doing it differently, so we're not doing a convertible note. We want to do it in a different way to kind of show, a few reasons. Showcase the technology we have, show other folks out there there is a way to do this in a secure way. We needed money. We wanted to raise cash as well. So that was another part of it. But also, I think we'll get a lot of marketing out of this as well, because it's a very unique, first of all, we're in a very unique position in terms of the types of licenses we have. And now we're doing our own securities token offering. We're very excited about that. And I'll talk a bit more about that in a minute. Q1, hope to get we'll be the guinea pig. And after that, on Q1, hope to get another issue on the platform. And throughout 2021, there's other technology enhancements we want to do, like building out support for additional blockchain networks. Stable coins is something I think we can integrate relatively quickly. If you're familiar with the space, what I think we can do here is that can kind of solve the settlement problem that we addressed before by having, instead of having to bring cash into the system, we believe we can do a kind of atomic DVP swap for the cash versus a stable coin and improve the settlement structure in 2021. And then, as I said, the target 20 companies on the ATS by mid-year. Trading application is built. It's ready to go. So these are a couple of screenshots of that, just to kind of reiterate what we can do. We can, we can onboard customers. We can bring them through the KYC process. We can onboard issuers. We can host an offering page for the issuers to display their offering. We can integrate with the escrow account so that investments can be made into the primary offering. We can issue tokens onto the Ethereum blockchain. And then we can trade those in an ATS. All that is ready to go. So why now? A few reasons. The space is hot. Institutional investors, especially family offices like ourselves, are increasingly allocating to private markets. There's a lot of innovation out there that hasn't been tapped. There's a lot of things we can do differently. I touched on that a bit. Stablecoin settlement is one. I think, getting kind of geeky again, I think we can use some of these lending protocols to create kind of a synthetic margin and kind of reinvent the way stocks are shorted, reinvent the way stock loans is done in the markets. The other thing is the market's changing. Custodians are coming into the space. The DTCC is not public, but it's not very well known. They are going to be making some moves into this space in the near future. The regulatory attitudes are changing. Jay Clayton actually was quite funny. He came out, he was quoted recently saying, 20 years ago, when you think about 20 years ago, there was no electronic trading, and now everything's done electronically. Maybe one day all securities will be tokenized. And I thought it's quite funny because I'm working on tokenizing securities, and 20 years ago I was working on building electronic trading. So I wrote a blog about that. That talks about my experiences in the early days of electronic trading and how it's kind of similar to where we are now. We've been fully bootstrapped this whole way throughout the regulatory process, and we feel it's kind of a testament to our efficiency, experience, and management capabilities that we've been able to achieve so much without having to raise any outside capital. We're raising now. We're working on the PPM. It's coming out. Our target is early January, and you'll be able to invest through our platform, or we can arrange something outside of that if you prefer, or into Texture Capital Holdings, the holding company. We're doing a 506c, seeking to raise 1.5 million at a pre-money valuation of 15 million, and would love to kind of tell you more about that at some point. So wrapping up here, I'd love you guys to join us. I have a few asks here. Give us feedback. You guys are in the space. You invest in other private markets. What do you think we should be doing? We'd love to hear from you. Become a customer. You can sign up on our platform and get early access to some of the deals we're going to have on that platform. We think the family offices are could be a kind of a game changer for how you're able to access both primary and secondary deals out there. We can help you with some of your portfolio companies as well. If you've got other investments you've made, and maybe I'm sure there's a lack of liquidity in them, we'd love an introduction. Let's see if we can tokenize them and enable them for trading on the ATS. And I guess our final ask is we'd love you to invest in the company, and I'm happy to schedule a call anytime to talk about that. I think we have a few questions, do we?
Yep, there's a couple more in here.
Okay.
I think the only one left over is a Polymath. Andrea asked about Polymath. Richard, you want to talk about where Polymath fits in the?
Yeah, they were early in the space. I don't see the question.
Polymath?
I don't see the question. We're talking to them.
It's just about competitive landscape. Maybe I got the question. So it's Yeah, so I'll answer it. So Polymath are a technology provider. They provide some of the fabric technology around blockchain. They have around for a few years. They're redoing their technology, just literally coming out in the next few months on an ongoing basis. They're among the people that would say maybe dozens of firms that we're talking with. So if they were providing technology to an issuer or to somebody specific, we would work with them and that issuer. We built our system to be able to be open to something from Polymath, something that maybe one of Polymath's competitors is out there selling to. We want to be able to plug into all of these technologies. They're not a marketplace or a broker dealer or registrant, or they're a technology provider in the space.
There's a question about Horizon Globex there.
I think that's it. I'm kind of watching by there. I hope we've got them all.
No, I don't think you have. I can see a few more. There's a question about Horizon Globex. I'm not too familiar with them, but I don't believe they're a broker-dealer or have an ATS. Question, any opportunities for CBDCs, central bank digital currencies, that means, which is, well, there really aren't any yet. There absolutely is. I mean, huge opportunity in terms of settlement when, when we get a US CBDC. We are US focused only at this point. But there's stuff we can do in the meantime with stablecoins, which are basically tokens that are issued onto a blockchain, but there's one-for-one fiat reserves held in a bank in custody for every token that's out there. So the tokens kind of are blockchain representations of cash, and when you've got the security and the blockchain and the cash, let's say, on the blockchain, you can streamline things even more. So yeah, definitely an area we're watching. And Lowell, I see your question. We'll definitely look forward to speaking with you afterwards.
The this will disclose that I don't know what I'm talking about. Do you guys need a bit license to do this?
We don't, because we're not touching crypto. So if we were, I think even if we were taking payment in crypto, we'd probably need it. So we're focused on the securities markets.
Yeah.
The bit license is a headache for everyone who has to get it. We just had one big headache with the SEC. We don't need another one right now.
Exactly. And from a regulatory perspective, in terms of jurisdictions, states, that is, you can operate across.
Yes. So for primary listings, we want to do everything as a 506C. There's blue sky waivers for all that, so we can offer those in all 50 states. For secondary market trading, we would need to be. I'm sorry. The securities can be offered in the different states. We do need to get 50 states registered. We've started that process. We're at about 7 or 8 or something right now, but we will be at 50 at some point next year.
So it's just a matter of getting the paperwork done. Yeah.
It's some states are check the box and some are not. Some are quite arduous.
Gotcha. So just repeat the ask, just so it's firmly planted in everybody's mind, about the raise you're doing, and is it definitely in conjunction with you floating your security on the platform?
Yes, it is. I'll flip back to the last slide. You can disclaim if you like there. Okay. Yes. So it is. We're raising 1.5 million at a 15 million pre-money, 16.5 post-money valuation. It will be a security token through our platform, but don't worry. It's a security. You don't need to have any expertise with wallets or anything like that. We've actually built our model with institutions in mind, and we said from the beginning that no institution is good. I don't like dealing with crypto wallets, and I've been in this space a while and consider myself fairly experienced. Your average institutional investor, whether it's Wellington or a family office, probably doesn't want to deal with that. So we've taken that out of it. When you log in, we create the tokens and they exist on the blockchain, but you don't need to worry about it. So don't let that be a hindrance. Also, of course, one thing I forgot to mention is that we will be fully intending to have these securities liquid and trading on our ATS in a year's time, or maybe sooner, but there's a 1-year lockup for Reg D security before transfer. So we want to provide you guys with liquidity opportunities. You don't necessarily have to hold on to it for forever, but we'd love you to, but you have that option.
Yeah, super cool. So if one was interested in discussing this further, the obvious is to be in touch. Just to be clear, we're going to make sure that everybody who had registered or is on the call or both, will provide you the information. So for those of you who have asked to be in touch, we'll make sure that Richard and Robert get your information and they'll email you directly. Is there anything else you guys would like to close with a closing statement? And whoever would like to go first, please do.
Sure, I'll go first. I think we have a great opportunity here. I hope I've communicated that effectively to you. We're in a very unique position, and the timing is we think timing is great because things are changing. The regulatory attitudes are changing. There's going to be a custody solution, and we're very excited about this. And please get in touch.
Awesome, Robert.
Yeah, all I know is that I always felt that I was saying internally about the Victor Khayyam thing. For those who are of the age to remember, I like the company so much. I love the product so much. I bought it. Really love to have you try out the product. It's easy to do. As Drew mentioned, it's really not a charge, and we like to onboard you. We like to, as we ask you, get your reviews as to what you'd like to see in it. And I think that would lead you to asking us more about the pages on the screen right now.
Very cool. Well, thank you for that was
the other one.
I've seen a million pictures. Thank you for doing that, guys. It was awesome.
Thanks so much, Arthur. This is great. Thank you.
Thank you all for participating today in your smart questions. We super appreciate it. Make sure everybody gets in touch. And as I always say, and I haven't got sick of it, so I hope you're not. Thank you for sharing with us the only thing you can't make more of, and that's your time. Until next time. Thank you, guys.
Thank you.
Bye-bye.
Thanks. Pleasure.